Okay. All right. All right. All right. All right. Make sure everything is set up and then we will get started. All right. Hmm. Well, I mean, if it hasn't dropped, then it's going to potentially pop. If it hasn't dropped, it's going to potentially pop. Okay. All right. So let's get started. Let's go over the news. So we're going to go over the news, obviously, first. We're going to go jump into the Nasdaq chart. We're going to jump into the ES chart, and we'll look both at CL and gold. The gold trade and the CL trade from last night did play out. They did exactly what I thought that they were going to do, and I guess we might as well just keep looking at those charts, and we can continue to map out those trades. But before we get into that, let's talk about the news going into tomorrow. So right around that 9 o'clock algo, we do have the new home sales. If I'm not mistaken, one of the Fed speakers did state something about the real estate and the conditions that it's in. So I do expect for housing news and employment news to continue to influence the markets until we get that rate cut that everybody is hoping that we get. At 9:30, we do have some crude news at 9:30. And at 12 o'clock and 3:30, we have the 5-year note auction and we have the bank stress test info. Let's actually open up the bank stress test info and see what the heck they're actually talking about and see if we can get an idea of what this is. So it reads the bank stress test result released by the Board of Governors of the Federal Reserve System. It presents a result of a bank stress test for the largest U.S. banking organizations. This test is conducted to determine the reaction to different financial situations, which, I mean, that kind of makes sense. The result would affect the stance of monetary policy. Wow. So we can now know why it's a red star event, and assesses the risk and long run goals of price stability and sustainable economic growth. So a high reading is seen as bullish or positive for the USD, whereas a low reading is seen as bearish. So, I mean, I don't know what that would mean in this situation. We don't know if good news is bad news and bad news is good news in this situation. Maybe if the banks fail, bearish move, because I'm going to make the assumption that the market says, well, if the banks can't, obviously if it breaks under pressure, there's going to be a bank run, and obviously the Fed is going to need to step in. So maybe, I mean, if you're going to think about it that way, maybe this could encourage the Fed to do a rate cut. In my opinion, it would probably be a rate hike, but I mean, it's not my job to interpret the news, honestly, because what I think about the news is not going to affect the markets. It's what people, these institutions, how they interpret the market, and they're the ones that affect this market, institutional and big lock traders. So, all right, with that out of the way, let's jump into this chart. Let's jump into the chart. What's up, Smith? I mean, shit, if you want to jump in the stream and actually put your 2 cents, I mean, that would be cool. But so kind of answering Smith's question, I caught this whole move up. I caught this entire from top or from bottom to top. I did record this trade. I do record a majority of my trades, and whenever I actually take the time to put them in shorts, I will. But I caught this from bottom to top, catching this entire move up. So I was very proud of that trade. And obviously that was in addition to the trade that we caught early in the stream. This trade, touching the top of this range. I didn't get caught in this move down. I was able to get out of this position here around the top. But after I saw this move down, I was like, let me just try this double bottom. I mean, what the hell is it going to do if I just leave my stop underneath this low? It's a great risk reward trade. I talked about risk reward last night, where it's just a gamble, where you have all this potential upside for this potential downside. And I'll take that trade every day. And when I saw this opportunity present itself, I took this trade and I was rewarded in this instance. I mean, the market could have continued to trade lower and I only would have lost about 2 or 3 points because I literally had my stop at 508. Literally had my stop at 508. So I wouldn't have lost that much. I think I would have lost 3 points. So, or 4 points in this play. So I was actually proud of this one. Like I said, Smith, if you want to jump in the stream, put your 2 cents. You're welcome to do so. I think the chat is open. Let me make sure, just in case. Yep, it is definitely open. Anyway. All right, so going back into the Nasdaq. So I was talking to Smith about this through text. I think this may be the drop. I think this will be the drop. And to kind of talk about that gap that we talked about, Smith actually pointed this out, that there's a gap on the Nasdaq. And if you look at the continuous contracts, you can see that here's that gap on the Nasdaq, and it's around that 610. I think what the bottom of it is around. It starts at 610, and it starts around 762. So that break of 762 probably caught a lot of people, because what I'm gonna make the assumption is that anybody that's looking at this continuous contract, they saw that break of structure at 760. And they thought that we was going to fill this gap. And unfortunately for their positions, the market made a complete U-turn and traded higher. Now, I think tomorrow will be the dump. If you look at the higher time frame chart, go to bed then. If you look at the higher time frame chart for the Nasdaq, you can see that we're actually price traded right back into this area of resistance right here. We traded right back into this area of resistance. And so far, you can see that price is slowly beginning to sell from this area. And because we got this move up towards the end of the day, this move up was not based on structure. You can see that price trended up, but there was little to no price action. We do have these little consolidation areas on the way up, and we do have this bounce from this consolidation area and right at this point of control. However, usually when I see price action like this, I know that there's nothing but stops underneath this move. And all the bears have to do is tap into the stop, and it just becomes a cascade of a rapid move down. And right underneath these lows are more stops. So if the bears can use the stops that's underneath this low, then tapping into this area will be no problem. And we can get further downside. And that gap is at 610. So about a 300 move to the downside would not be unheard of, especially not for the NQ. If the bulls want to be successful, they're definitely going to have to break this high. Let's see where that high is actually at. They're going to need to break this high above, well, 995, which is basically that 20K mark. I'm pretty sure that the Nasdaq can possibly tap into this 20K mark. We do have this high at 2030 that I'm pretty sure the market is going to try to protect. So if the bulls do want to see more upside, ultimately, they have to take out this high at 2030. This high has to be taken out. Not only does the high have to be taken out, we need a strong close above or a price acceptance above this high. And when price comes back and retests this area, this is where the bulls are going to have to prove that they really want this and to want to trade price higher and break out from this big giant range that the market has been trading in. And that's when we'll get that move higher. Now, if we don't see that, if price comes down and price completely collapse, then this move right here is what I expect to happen on the Nasdaq. But with light news tomorrow, and we have the employment number that's coming out on Thursday, and we have PCE coming out on Friday, I'm going to make the assumption that the market is going to want to set itself up for a long, because all inflationary data, all data that's involving the Fed, for some reason, it's all been bullish, and I don't think that trend is going to stop with Friday's news release and with Thursday's news employment release. So that's what I'm going to be looking for, especially now that price has traded right back into this area of resistance right here. So overnight, this is what I want to, this is what I'm looking for. I'm looking for the bears to defend this area. I don't want to see price trade above 2030. I don't want it to see it trade above 2030, because if we get a price to trade above that high, we can possibly see 2085. And honestly, if the bulls are trading with that much momentum, then I just expect for price acceptance to happen above these highs and price to trade higher. But based on the structure, and right now, with price testing this area of resistance, I do expect for the bears to at least to defend this area. So I do expect for a slight sell-off, and it's going to be up to the bears to be able to push price down and really show the bulls that it used to be a bull market, now it's a bear market. So that's what I'm going to be looking for going into tomorrow. Unfortunately, all the levels were kind of hit during the day. So at this point, usually when all the levels are hit, the only thing that we can do is trade off of the structure. And right now, price is trading in a big, giant range. And so what we need to look out for is either a breakout higher. And if we don't get that breakout higher, then we need to start watching for that trend down lower and possibly a break of this structure. So that's what we need to really look out for going into tomorrow. Yo, what's up, B for real? What's up? What's up? So I think that's it on the Nasdaq so far. Let me make sure before I actually completely switch over. Yeah, and if you look to the left, I do also want to point this out on the Nasdaq. The bulls definitely have a lot of work cut out for them tomorrow, because we do have all this area right here of consolidation. And this is the first area where we had that break of structure going down. And I'm going to assume all the orders that are passively waiting are going to want to be filled if they're not filled already. So just be mindful about that going into tomorrow. But I think that's it on the Nasdaq. Let's jump to the ES. Okay. So on the ES, it's the same story on the ES. It's just that on the Nasdaq you can see it more clearly, but here on the so here on the ES, price is also trading in the range, but we did have a small range breakout towards the end of the session. Towards the end of the session, we did see a breakout from this range, but once price broke out of this range, we saw price trade right back into it. And when we see stuff like that, that's where we don't want to take a long, because obviously, most likely, it was a sweep of liquidity. And if you look to the left of the structure, you can see that this was a massive bearish move down from this area where we got that break of structure. So I do expect for the bears to come back into this area and try to push price going downward. Now, will the bears, the question is, are the bears in this area, is it enough for a reversal? Now, what it's starting to look like to me is that this is the first leg, and this is the retracement, and this could possibly be the third leg going down. So I will say that obviously that my bias is more bearish than bullish, especially the location that we're sitting at on this chart, because the market is going to have to really trade above this 95 3/4 level. But really, I think it's on the other chart. Let's actually go to that chart. That's the NQ. What we really got to trade above is, not only do we have to trade above this high, but we got to trade into this range, and we need to break out of this range. So the first step for the bulls is to trade above this high, break out of this range, and have price acceptance above it. Because if you look, we have a consolidation here, and once we had this consolidation, this is where we broke. So the bulls can either take price up here or take price right here. However, I do feel that with this level right here, this is the first level that the bulls are going to have to get over and stay over. So the bears have at least 3 levels of resistance to break out of before we start seeing higher prices. Now, we have been in a crazy environment where the bulls have been defying chart gravity. The bulls have been making lower lows and lower highs, and despite that, despite making lower lows and lower highs, they've been managing to still make that move up higher. They've still been managing to do that, and which has been making price action trading a little bit difficult. However, it does appear that with, I guess, the start of this week, bearish price action is actually starting to work, and bullish price action is not. For the last couple of months, you could trade in the middle of the chart with a long and be successful. Now, it does appear that if you trade in the middle of the chart, thinking that you're going to trade through bearish resistance as price has done before, it does appear that you will find out. So I'm getting more confident with bearish moves down. However, I do know that this is probably short-lived, and this is only in preparation for the news release that's going to be released on Friday. So kind of talking about the trade, that I was talking about with Smith. I was able to catch this trade at the end of the day. This is the trade that we took on stream. We literally took this to the T. We got this trade to the T, and we was able to get our first target on this profit, our secondary, and I think I only had runners. I successfully was able to scale into this position and take it off at the high. So the trade that we took on stream, even though it was painfully slow, it was a highly successful trade. I was proud of it, but the trade that I took off stream was even better. I almost let this one pass, but I remembered what I said earlier in the stream about not taking certain risk and then feeling bad about it once it works. So when I saw this really technically a triple bottom in this area, I did take this long, and I was able to capture this entire move towards the end of the day. And like I said, I was very proud of this move right here. So but I'm done being a bull. Like, I really believe that the market is definitely going to try to break these lows under 511. The level that I had on the Nasdaq yesterday, I do believe they're still good. I still think that we may be touching that 498 to 490 level on the ES tomorrow. This level on the ES has still not been hit. Unfortunately, all the levels on the Nasdaq has been hit, but not on the ES. So this is where I have my eyes for a reversal trade. Not necessarily a reversal trade, but a bounce in this area. We may see 485 tomorrow. We may see that, or sometime this week. But depending on the price action, I'm going to assume that there's going to be a lot of buyers at that 500 level. But obviously, I wouldn't recommend trading at that 500 level, because we know that everybody is going to get in at this level, and the market is going to want to run that stop. So I'm thinking that 498 will be a safer entry, a scale in at 495 to 493, and possibly a stop, at 89, 88, a 10-point stop, 15 micro contracts, scale in of 3 additional contracts. I think that would be a $600 loss for 10 points of risk for a potential move back up to at least 20 to 25. 20 to 25. And based on the employment numbers that comes out on Thursday, if we see this grind down the entire day, I think that we'll probably see that reversal possibly on Thursday, and then we'll see a continuation going into Friday. So we'll see. We'll definitely see. But that's kind of my, I want to say prediction, but that's what I'm going to expect. And we'll see if we get that. Let's look at this real quick. If we look at previous price action. Now, we spoke about this yesterday. The ES also has a gap, but it's like a 10-point gap. And we're going to mark that on the chart so we're aware of it. The futures market, always, if there is a gap on the chart, you can bet your money that eventually the market will come back and try to fill it. So let's actually look at that. And this was a gap created from the changeover from June to September. So you can see that the ES basically filled up majority of its gap. So you have a gap from 462 going down to 455. So that is about, what is a 7-point gap? It's a 7-point gap. And I'm going to make the assumption that the market is going to want to fill this gap. So we may see that with the news on Friday, or we may see that going into tomorrow. But just know that eventually that gap will be filled. It's just a matter of when it will be filled. But I think that's it on the ES. Those are the areas that I will be looking for. I mean, you do see that there is support here at 450, so 450 will be a level that I'm going to be looking at. I think if we get down to 450, we will see a bounce here. It was resistance. You can see that price broke out from this level, and obviously we haven't retested this area since the breakout. 462. We also may see a double bottom here, but then we also got a low at 473. But I think we made a bounce from this level, so this level may not no longer be significant because we've bounced from this level, and if price does come back down, it'll probably trade through that, and we can possibly get that gap fill going back down to that 50 level using this area as stops, or these stops underneath this low as fuel to fill that gap. Because I mean, if we trade down this far, they might as well fill the gap, unless they fake out and then come back down and fill the gap. So, I mean, I guess whenever we get closer to this level, we'll talk about it, but just be mindful there's a gap right here. But I think that's it on the ES. We can look at gold and CL. So last night we talked about CL selling off. CL is a commodity, is not the Nasdaq, is not the ES. With commodities, you can kind of trade with confidence that when you see a sweep above a high, it's highly likely for it to sell off. 9 times out of 10 is going to sell off. However, if you do see a break above a high, like in this instance right here, you can expect for price to trend up higher. And I see that that sequence of price action happens a lot. You get a break of that structure, price begins to trend. You get a break of structure, price trends. The reason why price is always trending after a break of structure is because commodities are a good way to remember how to trade commodities is they're stop diggers. She's a stop digger. Commodities is always sweeping liquidity. You see how it'll sweep lows, it'll come up and sweep highs, and then it'll come back and sweep lows and sweep highs and sweep lows before it finally makes its move higher. This is the main reason why I don't necessarily like trading CL anymore. Because you might have a day where the market only moves a couple of points, and the type of trader that I am, I like to have 90-point targets with a 27-point stop on CL. And so, I mean, sometimes you don't get the 90 points on CL, or you don't get too many good trading opportunities with CL. So I've kind of slowed down trading her, but I'm still very knowledgeable with this instrument. I've taken plenty of payouts trading CL. And I've blown my accounts trading Nasdaq. So we got that breakout there. Okay, so it does appear that the CL is going down. Okay. What's up, the trader shop? Yeah, I don't mind going back over just like a summary, but yeah, we already looked at the Nasdaq, the ES, and now we're on the CL, and we're about to do gold next. So I do see a range right here. I do see a range. Okay. Well, actually, I know you do a lot of chart analysis as well. I'll go back after this, and we can actually talk about, I mean, what you're looking at going into tomorrow. I have a bearish bias going into tomorrow on both the Nasdaq and the ES. I do think that we're going to take out these lows on both the Nasdaq and ES that was created towards the end of the session. And I do feel that we're going to trade lower, and we may even take out that gap that was created during the rollover. And then we're going to probably see a bullish reaction going into PCE on Friday. I say that it's most likely going to be bullish because every inflationary data that we've gotten so far has been bullish, regardless of what we feel about the economy and what we see in reality. Apparently the market sees it differently. So, I mean, we just shut the fuck up in color and we trade these charts, and I'm going to make the assumption that it's going to be bullish. And that the market is going to want to set itself up. Okay. So price did trade back into this range. I highly doubt that there's going to be any real buyers here. So I'm going to make the assumption that they're going to try to get back down to $80 a barrel. And once we get to $80 a barrel, this is where I think that the buyers or the bulls will make an attempt to try to push this price higher. If the bulls fail at this psychological level right here, then that means that price is going to want to come back down to $78.30, because this is where price is going to get to if the bulls fail here at this area where they previously have support. And like I said, that $80 level is a psychological level. I did see people talking about this level. So actually, let's actually look at the DOM on this, because the DOM on commodities are kind of legit. We can see that, yeah, you can see that there's a lot of people at that $80 mark. There's a lot of passive buyers at 80. If these bulls fail, you can see how thin it is. You can see how thin the DOM is, at least right now, if they fail here at 80. I think this is what, 78? Let's see what that's looking like at 78. 78, 28, 78, 28. So there's not too many orders sitting here at 78.28. I don't think anybody thinks we're going to get that massive of a drop tomorrow. But usually when I see price trend up on CL and we get a big drop like this, and then they retest and the bulls fail to take price higher, this is usually the signal for the reversal. And if they fail here, we might be coming back down into this area. But let's actually take a look at this 78.73. So there are people sitting at 78.50, and you can see that there is a lot of people that just have passive orders in this area right here. So if you're a CL trader, obviously trading, oh crap, I don't think y'all guys can see this. I apologize. So if you're a CL trader, just be mindful. I would wait for a bullish confirmation on CL before getting in at this 80 level, because you know everybody's going to get in at this 80 level. So we may see a stop run lower. And then once we get that stop run lower, we can possibly see price testing back up into this higher structure. But let's just see what happens when price gets to right here. Shoot, I wish we can do this gold, and we can jump right back into the ES and the Nasdaq, and you can just put in the chat what you see, and we can just talk about it. So with gold, so the trade that we talked about yesterday and yesterday's NA meeting, I mean, it worked perfectly. It worked perfectly from last night. on gold. But it does appear that gold is still selling off. So, I mean, like I said, I'm not necessarily familiar with what moves gold, but if gold is going down, I'm gonna make the assumption that the dollar should be going up. But if the dollar is going up, that means that the indices should be going down. So obviously a lot of this correlation is obviously divorced from each other because we're not seeing it. We did see this massive move down on Sunday with the dollar. Sunday going into Monday. We did see the dollar recover today. And even though the dollar recovered, we still had a bullish, somewhat bullish day on the indices. And it does appear that the dollar wants to trade back into this range up here at 105. So it's very interesting that the dollar is still trading higher and the indices are still trading higher as well. But we'll see. But with the dollar going up, that means that the gold still has more room for downside. Let's see if we can actually try to locate an area where the dollar could go to, or could go to. Do you see area right here? Okay, so if you're going to trade gold, if we get a break of this structure, I would never short this low, but I do know that people are going to short a break of this structure. And we do have support here at this 2320. So if you're going to take this bad short, in my opinion, short, I wouldn't think that price would get past this level, especially with this support here. You can see that the bulls are showing up in this area. And there is a low at 2304. Obviously, that's not where you should put a stop, but yeah, so for right now, that does appear to be a stop, or the higher low. So I do have a feeling that they're going to want to protect that. They're going to want to protect that low. Because if we break this low right here, we're definitely have a lot more room for downside. Definitely a lot of room for downside. All right, so the trader shop is saying that, yeah, we break the low on oil, we'll see 79.68. Yeah, definitely. Yeah, with commodities, they don't play games. They don't play that fake out, breakout crap that the indices play. I mean, they don't have the liquidity to do that. That's why you can trust the price action on commodities. However, a one trade will be literally the entire day, which is a double-edged sword. He said they've been trying to take out 2304 a month. Yeah. You can see that they made an attempt here. They almost got it to right here. And I'm pretty sure the bears that was in this trying to take out that low. Yeah. You can obviously tell that they were used to push this market higher, and they had to cover their position because there was no price action in this move up. This was literally a stop run for people that the stubborn bears, because being a bear, we can definitely be stubborn. We will risk this entire move just for this little bit of points. And I'll be the first to tell you that that is absolutely real. Being a stubborn bear is definitely real. Definitely. Yep. Yeah. Yeah. I mean, during the summer, I think it was, last summer, man, the CL was such a great instrument to trade. I almost completely dropped the NQ at the time. It was a great instrument to trade, man. Just if you're a technical analyst, man, it's such a beautiful instrument. It moved just like the ES structurally. but then you saw moves just like the Nasdaq. It was such a perfect blend. And then obviously that conflict with Russia and Ukraine happened, and all that price action just went down the damn drain. All the good price action started happening at 2 o'clock in the morning. Nobody got time to be up to manage the position at 2 o'clock in the morning. Okay, but that's all I have with gold. Um, I would just look for the short and look for price to bounce in that 2320 area and see what happens there. Yeah, so what is the trader shop? What is your opinion on the Nasdaq and the ES? What are you looking for going into tomorrow? Yeah, I stopped trading natural gas as well because I used to trade natural gas and CL. If I couldn't find a trade on CL, natural gas was my side piece. And I guess I must have jumped into energy trading at the right time because, man, the movement on both of those instruments was beautiful. But not anymore. I mean, it moves when it wants to move, but it's not consistent enough to, like the indices are, to capture big moves every day. Yeah, we was just talking about that 2030 level. Yeah, that's definitely going to be that level that the bulls definitely have to get over. So we're definitely on the same page with this 2030 level. You think so? You think Monday has brought the low of the week? Actually, where is Monday? Let's actually look at the on the hourly chart. Okay. Okay, so it's about right here. Yeah. So we'll see. If the bulls definitely fail to get over this 2030 mark, I do see a reversal coming. And what's your opinion on the ES? Yeah, so you're saying that if we can get above this, yeah, we can definitely see all new all time. Wow, what a tongue twister. New all-time highs if the bulls can get above this high. So that's definitely going to be a mission for the bulls to complete. And if they fail, we will definitely see that move down, especially with all this bearish momentum right here. With all this bearish momentum, we're definitely going to need some news to get past all of this in one day. So we'll definitely see. And I'll just wait just in case you're typing something for the ES. But you said it's close to CPI. So where is the CPI gap on the ES? Hold on, CPI? Says Wednesday's June 12th. Wednesday, June 12th. Actually, we have on the I'm gonna pull up the continuous contract. We actually got 7 more points to fill on the ES. We got 7 more points to fill. We was actually talking about that earlier on the ES. That's not it. Yeah, we still got 7 more points. We got this gap at 55 and 62. So we still got this gap right here. Yeah, I mean, it's kind of hard. It's gonna be hard because honestly, well, it's not gonna be hard. If price gets down here, it's gonna be hard to determine if they're going to fake out and fill this gap, because obviously this right here was the fake out to fill this gap. The market used all the stubborn bears because they was like, we're about to fill this gap. And the market faked them out. And from this move, we got this massive move higher. And I think it was that day where you couldn't even short the market. It just went higher. It just went freaking higher. I mean, obviously it went higher because everybody was trying to short the market. I remember trying to short the market because at least on Top Step X, they had this big giant gap on Top Step X that wasn't there on the Ninja Trader chart. And I'm not gonna lie, that threw me off. I was one of those stubborn bears thinking that they was gonna fill the gap. But on Ninja Trader, there was no gap. Yeah, like it's hard being a bear out in these streets, man. It's definitely hard being a bear because man, they just use us. They use us to move this market up higher. And then the market shorts when you least expect it. It shorts when you least expect it. So yeah, making that transition from being a bear to a bullish bear, yeah, it is difficult because I have an eye for shorts. When it comes to longs, I don't necessarily have an eye for longs. I would just use support and resistance areas to get long and hope. But reversals, short, I can see that a mile away. That's why I like shorting. I can see shorts. I can't really necessarily see the longs. Yeah, that's actually how I see the market now. The bulls are just taking their profits because shit, the bulls are not letting the bears get any bearish price action going. And like I said, it's hard. It's hard. But we will see. But okay. So we went over everything. I talked about the highs that the bulls are going to have to get over. If they fail to get over those highs, I do expect for a reversal to happen. I am looking for it tomorrow, but if we don't get it tomorrow, then we may get it Thursday. I just know that we're going to get it because unless the market is going to trade higher and that PCE data is going to push us even higher without any price action, man, that's going to be crazy. That is just going to be the most absolutely crazy thing. And that's going to be definitely hard to trade. We might have to sit on our hands with that one if the market just goes up and then goes up even further for PCI or PCE. So we're going to have to see. Yeah, that's actually what I'm expecting on Friday. I'm actually expecting that on Friday. But all right, guys, I appreciate you and the Trader Shop. I appreciate you dropping in. As always, we'll do this again tomorrow, and peace out. All right, I'll see you then, man. Peace.